all right. So it's been a while. I dropped a video here. Today, I'll be discussing waiting as a fundamental attribute every successful trader must possess. And that is coming on the heels of the discussions in the Telegram group over this week. In fact, some weeks back, we've been having the discussion. And I felt I needed to do a short video, very, very short one if possible, to address this issue, right? I asked that question in the Telegram group. It's possible that you've hopped from one Telegram group to the other, WhatsApp group, Facebook group, whatever social media, maybe 20 different types, and you've learned several strategies, and you still are not profitable. The question is, then what is wrong? Obviously, some strategies could be very poor, some could be good, but one strategy may be better than the other, easier than the other. However, get a particular strategy that has an above 60% win rate and drop that strategy in the hands of 10 traders. You most likely have 10 different results. Some, in fact, most will fail woefully, and a handful might just break even, right? And the question is why? So why do we have this urge to go from one strategy to the other, seeking for what to blame? We might blame the strategy, we might blame whatever we want to blame, right? So I'll be doing a series, hopefully, to address some of the key things. And today we'll be focusing basically on waiting as a fundamental attribute every successful trader must possess. Number one, every successful trader trades a setup. And what is a setup? It should meet clear conditions. A setup tells you clearly when to buy, when to sell. It tells you clearly when to buy, when to sell. Now, in between the lines, reading between the lines, if a setup tells you when to buy and when to sell, invariably it's telling you when to go into a trade, then the setup is also telling you when not to press any button. A setup should stop you from trading every day or should be trading every time. A setup should be able to tell you what time of the day you should trade, what you should see before trading. We trade the institutional order flow, for instance. We would mark up our order blocks for, like in this case, we have, let's say we have this point as our breaker on EU, right? We would be waiting for a retest of our breaker or the order block, the source, I beg your pardon, to sell. If this is then this becomes our setup, right? Then we go down to the 15 minutes and do something else, right? To confirm the setup, we now go in there, look for LSB, and if you like using, in TDI, then you might wait for your shark fin or divergence. If you want to use the fibs, then you might draw your fibs and wait for it to play down into your sweet spot and blah 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 blah. That is a strategy. Now, sorry, I beg your pardon. That is a setup, right? Your setup tells you when to go into the trade. Now, I know many people, many retail traders, many traders just have this urge to always be trading. You always want something to be on your MT4. You always want to see something happening, right? It's like you want to carry the whole world, and it's not possible. You trade that way, you lose eventually. You might win some trades. In fact, you might have some winning streak, but you eventually lose all the money in your account if you don't trade setups. Setups is what we should trade. Irrespective of your strategy, you've got to trade setup. Now, I have some very common strategies here. I'll just point them out. Here, if you're trading Bollinger Bands and stochastics and you do overbought, oversold, you have to wait for certain conditions to be met for you to pull your trigger. If the conditions are not met, you simply stay out. You simply stay out. Every trade you take outside of your setup, you just position yourself to fail. Remember, setups, and that takes us to number 2. I'll take 1 and 2 together now. Setups should be born out of a strategy, right? Just as we set up, a strategy is basically a storyline. It's basically a storyline, and it should be consistent, else it isn't a strategy. I don't care what the strategy is, right? If you trade ICT, they believe that price is delivered, right? It's like some other persons believe that price is random. You just have to find structure or a repetitive behavior in the randomness of the market, right? So they trade wedges, they trade flags, right? They trade geometry, they try to find a rhythm or something repetitive in the so-called randomness that is in the market. But the point is that you have to have a story. Whatever anybody says, a strategy is just a story. BTMM will tell you there are some people somewhere that control the market. They create first leg, then they come back and create a second leg. Then the second leg doesn't take out the first leg, and blah, blah, blah is a story. Everything is a story. Other blogs will tell you, okay, the banks have bought from this place. You see a large candle. Then when price comes back into the fair value gap, then you buy. It's a story. Every strategy is a story, right? Stochastics, if you use RSI, stochastics, MACD, and the likes, it tells you, okay, when price gets into the 25-30 region, it is oversold. You begin to look for opportunities to buy. And when it gets to the overbought region, you begin to look for opportunities to sell, because at those regions, it's like price or the rally is getting to a point of exhaustion. Ladies and gentlemen, it's a story, right? If you use harmonics, it tells you, okay, when X to A to B to C to D gets to a particular ratio based on Fibonacci, it's still a story, right? Whatever strategy you use, the story. Use pivots, story. TDI, story. BTMM, story. Other blocks, IOF, which is what I trade, stories. And I tell you, if you use a graph or a chart as colorful as this, known as the bounce back, it is still a story. Here you have Bollinger Bands, you have moving averages, you have parabolic SARS, you have MACD, you have stochastics, you have RSI, and you expect them to align. It is because you are believing a story that when these things align, the market will behave this way. Meanwhile, no, the market does not respect any moving average. The market does not respect any of this. It's a story. ICT, BTMM, trend lines, trend line traders, other block traders, supply and demand traders, is all a story. Now, I'm not here to validate or debunk any of those stories. In fact, I believe naked chart traders can make money, but many of them, majority, lose. Traders who flood their charts with indicators, they could make money. Many lose too. So at the end of the day, it isn't much about the strategy. It's about the trader and what the trader does with what the trader knows. So back to what we're saying, the strategy is a story, right? The story helps you to paint a scenario that should give you a high probability trade. Remember, everything we do is probability. I don't care if you feel your ICT and you say no, price is delivered, it's price. in that theory, they still believe that the Asian range is a dead zone where it's difficult to predict because an algorithm is, when you say difficult to predict, what you're just saying is that it is random. It means it's not delivered at that point. So I'm not here to help you choose a strategy, but to make you a better trader. Know your strategy well, and your strategy has to be consistent. The storyline has to be consistent, else it isn't a strategy. If the storyline cannot tell you what to do at a particular point in time, it's no longer a strategy, it's just a guess. Your strategy tells you don't trade the Asian session, that is a storyline. Trade the kill zones, that is a storyline. Wait for price to get to the order block, that is a storyline. Every strategy should have a storyline. The storyline should now give you a setup. The storyline, which basically is a strategy, should now bear a setup, should offer you a setup periodically as the market presents them. Right? That's how it goes. Every strategy should be back tested and forward tested. Right? But before then, here is the crux of the matter. If the storyline tells you something and offers you a setup, it means you have to wait. You have to wait for the setup to present itself. So what I see is someone is in a Telegram group and is trading the Bollinger Band strategy. He's also in 11 other Telegram groups, 2 of which trade BTMM, another 2 trade something, whatever strategy, London kill zone or London breakout. One other one trades IF. The other one uses an algorithm, then is in 2 signal groups, and finally is in a group where everybody claims to be a master. None of them is one, right? So he's buying EU, and at that exact point, somebody points out that EU is in a sell. And that person is looking at EU on a 1-minute chart, and he sees a long candle that isn't even up to 5 pips, and he's shouting, EU is dropping or EU is buying, and you quickly close your trade and follow somebody you don't even understand, you don't even know, right? Your account will never grow. You always contribute your money to the global pool. You always blow your accounts. Your accounts should be based on 1 or 2 strategies, and they should be fixed. Bottom line, you must be willing to wait. You must be willing to wait for your setup. If you can't wait for your setup, you're just contributing your money to the pool. Every strategy should be back tested and forward tested, right? So somebody paints a strategy and it looks so sweet, it looks so easy, it looks, you're excited on Saturday and like, well, on Monday, I'm going to kill the market. Have you back tested it? Do you know the winning edge that strategy has? Do you know if the edge is actually lesser than what you're leaving to go embrace? If you're using stochastics and MACD presently, and someone else is telling you about the strategy, have you back tested the strategy to know if the strategy will deliver more than the MACD and the stochastics you are used to? It might look fine on paper. In real life, will it perform that way? And one way to do that is to backtest. And I believe that backtesting will only give you an idea of what the strategy can deliver in terms of its win rate. But the strategy will not tell you the backtesting rather will not tell you what the strategy will do in real life. Why? Because in real life, you are faced with emotions. You actually see the candles painting, right? Your emotions are playing with you. There's a tendency that it might not work. And so I believe in forward testing. So if you learned a strategy, would you go to your demo account, or do you have a free $100 or $200 you want to play around with? And would you be willing to try this strategy out in a dedicated manner over a period of time to see how it plays out in real life before you plunge fully into it? Now, I see several people who think trading is an easy task. You just come in, make the money over your phone, go to a beach, have fun. Well, sorry you fell for that. Marketing, social media marketing. Trading is serious business. Sometimes I spend 2-3 hours back testing, right? And there are several tools you could use, right? Several EAs you could use attached to your, perhaps maybe next week we'll come online together and I'll show you one of those EAs, right? It prints the candle for you, even though it's history, but it prints it out for you. And while doing that, it gives you the opportunity to take the trade in real time as you would if price was live. And it has, I think I prefer that a little more to just back testing, manually, right? But you need to do that 3 hours, and that is what most people can do. So it's weekend, it's Friday, London, New York is closed. Then what do you do with the extra time? If trading is what you want to do, you have to create time to backtest. You have to create time to forward test. What that does is that it gives you confidence in the winning edge of the strategy. And by edge, I mean you are able to say, okay, this strategy has a probability of 60% win rate, 65% win rate, 50% win rate. If I take this strategy, if I trade on this strategy 100 times, 200 times, I'll most likely make this. Most likely, it isn't cast in stone. If you've not done that, and you simply jump to embrace a strategy because the presenter is very, very, captivating, and because the strategy looks very sweet, in spite of the fact that several people who present the strategy cherry pick, and they look for instances in price action where the strategy did well, right? So if the strategy is a trend following strategy, they look for trending markets and that has happened in the past and present the strategy to you. So what happens when you engage in using that particular strategy in a ranging market? Unfortunately, you don't know where the market is going to range. Nobody knows. You don't know where you're going to have an inside day. You don't know, right? So the strategy has to be consistent and you have to back test it to know. I tell you that some strategies are very good, but you can't use them on JPY pairs. They have awful results when used on JPY. Some have awful results when used on CHF. And if you trade CHF, it's very wiki. Weeks up, weeks down, shadow up, shadow down. If your strategy is such that needs you to trade your stop loss every 10 pips, maybe CHF might not just be for that strategy. Believe it or not, some strategy work best at London Open, and after then, that is all. Right? So what BTMM guys will call the vector move, the fake move, that is what the strategy targets. And once you get the fake move, that is all for that strategy for that day. You can't go use that strategy for New York Open. Some strategies work best for only the Asian market. When the market is so slow, and it's moving slowly, some strategies are just good for that. You have to find your strategy. You have to know what pairs they work on, right? What work best on. And then you can't efficiently do number 3, which is back test and forward test without a journal. Don't be deceived. Don't think you could just go in, trade, and throw away your MT4 on Monday, come back again and begin. We are beasts that love to thrive on repetition, right? A drunkard will most likely continue to be a drunkard. A drug addict will most likely continue to be a drug addict, right? Whatever we are addicted to, we are hooked up on, we tend to continue. If you have a bad trading attitude, or you learn from somebody and you imbibe a bad trading attitude, you most likely continue to exhibit that trading attitude irrespective of the strategy. And you know the funny thing, or the salient thing there? You wouldn't know what you're doing wrong. The only way you can know what you're doing wrong is if you journal your trades, and not just writing. Your journal should not just be that I got in, I took this profit and took this stop loss. It should contain, why did I get in? Why did I get out? And where possible, have pictorial representations of what the graph was or the chart was as at when you got in and also when you got out. And you have to study them. You know what happens? You see your faults, right? You see your weekends, and you now consciously try to be better and work on them. You consciously do that. I have friends who week in, week out, we always get into a trade, get 50 pips, tell themselves when it gets to 80, I will jump out. Then it pulls back to 20 pips and they now close at 20 pips. They've lost 30 pips. They tell themselves, okay, I'll do better next week. And they do that. They don't know that that is a problem. They've not been able to get out the underlying problem, right? So greed comes in, fear comes in, so many things come in. If you don't journal, and you can do that when you backtest and forward test, not just only when you're trading live, your strategy won't work for you, right? So in essence, to be able to trade a setup, you have to be good at waiting. No assumptions, no quick moves, just keep to the rules. Where possible, be very mechanical about it. Any change will create an alternate reality. And that's why you give the same setup to 2 or more traders and they'll have different outcomes. So you find out that some people tend to jump in too early. The strategy says wait for LSB, the last step to be broken, or a break in market structure, wait for a retest, then go in. Then I get questions like, what if it doesn't retest? So what? If it doesn't retest, let it go. Why should I jump in? Well, if you want to add, I will jump in after LSB, so long the candle that causes the LSB isn't more than 10 pips. Then you could add that to your strategy, but it has to be specific. If you jump in and out, then it means you jump in at some point and the candle that causes the LSB with 20 pips, are you willing to add 20 pips to your stop loss of 20 pips and go into a trade with the 40 pips stop loss? Are you willing to do that? Are you willing to trade LSB on GBP pairs that could have higher stop loss? Or you want to go with AJ, AN, and the likes, or perhaps just the majors? What do you want to trade? So in the Telegram group, one of the admins posted a wonderful strategy, and somebody without backtesting the strategy tested it on his account and lost some money and was like, I lost some. And my natural reaction was like, what? You just saw the strategy yesterday, you're trading it on your live account? That's not how to be a trader. We are not gamblers. We hope that the trade will go our way, but we are prepared in case it doesn't. And therefore, we trade with strict rules. We wait for our setups. If you trade BTMM, you need to wait for a shift. You need to wait for a shift to occur, where the 5 exponential moving average crosses and closes beneath the 30. And you have to wait for the first leg, second leg, and blah, blah, blah. There's so many stories that BTMM has. If you want to trade BTMM, you have to keep to the rules. You have to know them at your fingertips. You have to be willing to wait for it. Else, you would jump in. I have seen live, and I remember when I was teaching BTMM about a year ago, I told people that if you're waiting for shift, you have to be there live in the market to know when shift occurs. You have to be able to understand that the exponential moving averages are tied to the close of the candle. Meaning, if a candle prints downwards, and remember one of the rules for candles, don't trust the candle until it closes, because a candle that looks bearish now can be bullish at the end, right? So when you're trading BTMM, sometimes it looks like the EMAs have crossed, but by the end of that candle, when the candle closes, the EMAs don't cross. Something happens and they don't cross. If you jumped in already, now you'll be trading based on fear. You'll be trading based on hope, hoping that the EMAs will eventually come to cross. The question is, why did you jump in before they crossed? You should have just waited for it to cross if that's the strategy you want. If you don't like sitting in front of your system to wait for certain things to occur before you pull the trigger, then go look for strategies that enable you to trade using pending orders. If you want to trade with strategies that need you to wait for certain things to occur, you have to wait. And by the way, every strategy needs you to wait for certain things to occur. You break the rules, you may make some profits, but you eventually lose. It's as simple as that, right? So I hope I'm able to pass across some message today. You have to be mechanical. You have to have certain rules. You need to have a trade plan. Your trade plan should indicate what pairs you want to trade, right? I see people ask me, Bishop Brad, what do you think about trading on Mondays, trading on Friday? Oh, what I think is immaterial. I can tell you, I don't trade on Monday. The next question you should ask me is, what strategy do you trade? If I trade XYB strategy, XYZ strategy, and I don't trade on Mondays, you might be trading WX whatever strategy that allows you to trade on Monday. I see some people ask me, what pairs are you trading? Well, I can offer you that information, but it might not be of any help to you if the strategy is not the same. You have to know what strategy you're trading. Personally, I believe anybody who doesn't have an account of $5,000 and above shouldn't be trading gold. That's by my strategy. Because I don't want to risk more than 1%, at most 2% of my account. But if you're trading gold, you may most likely be risking more than 5% of your account if you have a $500 account, or even 10 per trade. So your strategy should guide you. If you're not following the 5 steps I've mentioned here, please close your MT4, delete it, and delete your live account, withdraw the money, go do something good with it, and come back next year after you've been able to design a setup, a trade plan for yourself, because you will just contribute that money. I don't care how long you keep making wins, eventually you will lose everything in that account and contribute it to the pool if you don't have a trade plan. If you don't stick by these things I've just said, you will eventually blow your account. Eventually you would. It might take some time, 1 month, 2 months, but you eventually blow it. You have to be able to wait for your setups to occur. If you're trading harmonics, tells you the D will keep extending, you need to wait for this, you need to wait for that, you need to wait for an engulfing, you need to see a tweezer, you need to see a bullish hammer before you go in. Stick by that rule. Harmonics can extend, and you have to be able to live by that reality that everything is probable. If you don't believe and you don't allow it to sink in that we're dealing in an industry that is not 100% certain, then you will be tempted to over leverage or use more over risk, take more risk than you should, and you eventually lose. So I hope I've been able to prepare you ahead for the week. I hope to do another video shortly on TDI and how we use it to trade the institutional order flow, right? If you've not subscribed to this YouTube channel, please do. And in the description of this video and every other video on this channel, you'll find the link to our Telegram group. You can come and see how we trade the live market, trade the Forex market. Nice having you around. Bye-bye.